Today, the stock market had a lot of ups and downs. Is this Wall Street bear correct? As the market participants are also counting on the Fed to head off a recession with sizable interest rate cuts. However, I want to warn you guys about this. Right now, we look at the Fed watch tool and we can see the market is priced in aggressive rate cuts out here from the Fed. If this time is any time like history, every time the Fed has went on an aggressive rate cutting campaign, it has always led to major stock market corrections. Now, today we had very little economic news, but after the bell, we have SMCI coming out with earnings. We have Rivian, we have Airbnb, Reddit, just to name a few. And throughout the week, we still have plenty of earnings to deal with. Then when we look at the expected moves, Reddit after the bell expected to move plus or minus 20%. SMCI expected to move plus or minus 15%. Then Rivian's expected to move plus or minus 13 to 14%. So we do have the potential for some big moves in the market. Unfortunately, these companies I just listed are not the top holdings of a lot of the indices like the NASDAQ or S&P 500. Now, we look at how the indices fared across the board. The Dow was up 294 points. The NASDAQ was up 166 points. The S&P 500 was up 53.7 points. And the Russell 2000 was up 2.23 points. However, notice with all these graphs, what do we see? Towards the end of the day at 3 o'clock, we started to see some selling. Now, that is a telltale that the big boys are still selling the market. Normally, a lot of the hedge funds are going to offload during the end of the day. Then we look at advancing issues versus declining. We had 70% of issues advancing for the day, with 23% of those issues declining. We come over and look at the sectors across the board, and today it was buy the dip. Every single sector out there was in the green. Leading the way was real estate. Now, we come over and look at Apple. Today, Apple formed an inside day. And given the strength that Apple had yesterday, meaning how much it came off the low, I'm really surprised that Apple formed the inside candle for the day. So what does that set up for tomorrow? Are we going to get a breakout or breakdown from this candle? Because every time we have an inside day, normally the next day we get a breakout or breakdown from that pattern. The MACD indicator still looks extremely horrible on the daily chart at this moment. Then as we come over and look at the dollar index today basically had an inside candle as well. Now, normally when the dollar rises, that's not favorable for the markets, but right now the markets have been focused on the Nikkei and the dollar yen, both of those which tried to recover. They did not continue to barrel lower last night and out here today. Now, when we look at gold also had an inside day. So again, I'm expecting tomorrow could be a breakout or breakdown pattern. And we're going to see, will we be able to run the highs out here of gold, or is gold going to dip lower? Then we come over and look at Tesla. What do we see? Tesla on the move up today, up 0.76%. Then we look at Microsoft today, look at the candle, a shooting star type of candle. Now, are we going to make our way towards testing the lows, or are we going to be able to come up a little bit higher to potentially fill the gaps? Now, to try to answer this question, and also how are the indices going to fare for tomorrow? For instance, we look at the Dow Jones. Today, the Dow came up, but look, we have a selling tail on top of that candle. You might say, Mike, that's what we had yesterday. And you said that could actually be bullish and we could look for a bounce in the market. Yes, you are absolutely correct. But as we start coming back a little bit lower, that kind of increases the odds now that maybe we come back and try to retest the lows from yesterday. Then we come over and look at small caps, another selling tail on top of the candle. And we did not fill the gap. So the indices out there today, most of them, if not all the indices today, were unable to fill the gap. Now, one thing to note, some of you guys had problems today with the market. Some of you guys found it very easy, but when the VIX is above 25, expect rips to be sold, dips to be bought, and it's going to be a wide range back and forth, which is really the type of environment that I love. But today the VIX was down $10 on the session, or down 27%. Now, does this rule apply for the VIX, where when we close plus or minus 10% on the day, we're likely to get an adverse reaction on the way back down? Normally that is the case, but once we get to elevated VIX levels, that rule does not necessarily have to come into play. Now, as we come over and look at what this Wall Street bear says, it's too soon to jump back into stocks after the sell-off. Here's why. And basically what he goes on to say is he's talking about a recession, but also he anticipates the S&P 500 is going to slide all the way down to 5,000 by October. Now, do you guys agree with this? Is the S&P 500 going to continue to go lower, or are we getting ready to bounce? Let me know your thoughts in the comment section down below. Because if we come over and look at the SPX real quick, notice 5,000, we made a low yesterday of 51.18. That's really not that much lower. If you look right over here, we also have a gap right about 5,062. MACD indicator still looks extremely weak. And even when we come over and look at the SPY ETF, you can see we had that tail on top of the candle, meaning the buyers tried to push it up, sellers brought it back down. MACD indicator not showing any signs of firming up on the daily chart yet. However, when we come over and we check the 4-hour chart, now we can see the MACD indicator is trying to kind of base out down around these levels. And here's what I want to look out for. Do we potentially get a double bottom pattern, which I'm going to show you a double bottom pattern that formed intraday today, but do we get a double bottom and then we start going up, or are we going to go ahead and break the recent lows? On the 1-hour chart, you can clearly see the MACD indicator has got the bullish cross. However, now you can see we've completed the 100% A to B equals C to D pattern that we talked about in last night's 5 o'clock video. We talked about it in this morning's video as well. And notice we came a little bit short of filling the gap. I think a lot of traders were focused on the gap. Now we're going to see, will they slap it simply right back down? I want to make everybody aware, Apex 7A massive 80% sale off all their valuation accounts, passing as little as 1 day. And you can also get a 150K account for only $40. You get a 250K account for only $40. And you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now, if we're going to get a retracement on the way back down, where would be some key levels? Well, if we look at the 30-minute chart, right in this area, right below value area low, we have a little minus development area, somewhere from about 520.16 up to about 521.66. Those are going to be key levels we most certainly want to pay attention to. If we come in there and we start to reject back up, that would actually be bullish for the market, because then we'd have a low, higher low again, while we're making higher highs. However, if we start breaking down, and more specifically, if we break the lows from yesterday afternoon, watch out, we're likely going to see substantially lower prices in this market. Now, when we come over and we look at the futures markets real quick, what do we see? See that gap right up here? But remember, where did I tell you guys that large order was lurking, right? Right around 53.30. Well, we did overshoot it just a little bit, but essentially we came right into the minus development area. And we talked about that big order last night on the live stream. In case you guys didn't know, I stream live Monday through Thursday at 8:45 p.m. So if you'd like to join me, all you got to do is make sure you're subscribed and the bell notifications turned on for all. Tonight, we will be trading once again. And now the question is, are we going to have any big orders lurking to the downside? Now, as I come over and look at Bookmap, you can see this order isn't all that strong just yet, but right around 5,200. And if we look, that's roughly what, about 60 points from the current level. Look right where 5,200 is. Where? Right on the edge of the minus development area. Also, it would be right near value area low from the weekly chart. So we want to keep an eye on that level. Do we continue to see buyers down at that level or not? That's still to be determined. Come over, look at the 30-minute chart with the daily profiles. What do we see? Well, we're closing right near value area low, and we were unable to make it to the point of control or the breakdown point that we identified out here this morning. Now, to the downside, we got to be open to the idea that we do have an untested point of control at 5203.75. Keep in mind that large order is lurking right below that level. So we're going to see, will that liquidity act as a magnet, pull in price not only down towards the point of control, but also down towards that 5,200 price point. When we look at the volume profile levels, value area low will come in at 5255.25. The point of control comes in at 5269.25, and value area high will come in at 5310.25. Now notice, if we do start coming below value area low tonight and we start coming back up, we then need to think about being on the buy side, regardless of the order sitting down here. We need to think about buy side trades, and we want to go ahead and say, all right, if we're above value area low, I want to target the point of control. I want to target near value area high, but we could also play off some of these other distribution peaks within the volume profile. Now, when we come over and look at the fear and greed index, we're still in extreme fear. We are sitting at 21. We'll see if that changes out here tomorrow. Then we look at the economic calendar for tomorrow. What is it on deck? Really, not a whole lot. We have the 10-year bond auction coming in at 101. So really not a lot to contend with. Keep in mind, we still need to keep our eyes focused on the Middle East. Do tensions continue to rise? If so, uncertainty in the market is normally not a good. If we look at this stat right here, we can see hot Julys often lead to market slides for the Dow. And on average, we lose about 7 to 5% on the Dow in the coming months. We'll see if this year is going to be any different. Keep in mind, we have an election right around the corner. Now, let's go check real quick. Has Rivian reported earnings out here yet? We look at Rivian after hours, knee jerk on the way back down 3.65%. Let's see if SMCI has had earnings out yet. SMCI down 0.48% after hours. Then we look at Airbnb, yikes, down almost 15% on the session. That is a big knee slap out there for Airbnb. And if you look after hours, we can see Airbnb is well below the lows over the last couple days. And if we zoom this out, that actually takes us even below the swing point, going all the way back to last November. Now, something right now has the markets rocking and rolling, and it looks like it's SMCI. They just came out with earnings. So we're down a little bit when we just looked at the chart a moment ago, but now I see the NASDAQ and S&P rallying up. And look, SMCI, big rocket ship on the way up, just like that, now up 13% on the session. How high will SMCI be able to go? Because we look out here on the daily chart, notice we're right near the lower portion of that prior consolidation area. If we get back into it, then there's a good chance that we try to rotate back up towards the top of it. However, I would be a little bit concerned somewhere about 880 or so, right near this high volume area on the composite profile. Now, as we jump over and look at the QQQs real quick, notice what we did, all right? We have a selling tail on the top of this candle. MACD indicator on the daily chart looks horrible at this moment. Then we dive down, look at the 4-hour chart. We can see after hours up $1.29. However, on the 4-hour chart, you can see the MACD indicator trying to base out, and we were able to come back and actually fill the gap from yesterday. If not, it was within a few ticks. Then we look out here on the hourly chart, and let's see, did we actually, oh, we did not fill the gap from yesterday. All right, put my foot right there in my mouth. We did not make it. However, we did get a bullish cross on the MACD indicator. Now, let me go ahead and redraw out this ABC pattern because it does not look like we completed the ABC pattern. Yes, we fell a little bit short of the ABC pattern. However, as long as we don't break the low down here at about 432.91, the ABC pattern could still be intact. Then as we look out here on the 30-minute chart, MACD indicator, where? Right back towards the zero line. This is a problem. All right, if we start to curl back over, that could be nothing more than a recharge point to see the NASDAQ actually come back down and potentially take out the recent lows that we saw just the other day. Then we come over and look at the weekly profiles on the NASDAQ. Now, we're unable today to make it all the way up towards a high volume area, which really isn't that expected. We had quite the push off the lows from yesterday all the way through to today. Then we look out here on the daily chart, notice, all right, we pushed up, but today we really formed a D as in dog shape profile. That also signifies that tomorrow is likely going to be a breakout or breakdown from this pattern. And if you look, yesterday, we had a double bottom at the lows. Today, what do we have? We had a double bottom as well. And I want to go ahead and map this out. I don't think it actually hit target out here. If we go ahead and we look, the double bottom pattern would have brought us up towards a point of control. However, we fell a little bit short. It doesn't mean it's over with yet. As long as we do not come back down below the lows, that double bottom pattern could still be in play. If this low holds from this afternoon, we could also be setting up an A to B equals C to D pattern. That would go something like this. Now that gives us a price projection, 18,635. Now stick with me for a minute because we're going to map out this other double bottom pattern as well. Look where that terminates, right near this developing ABC pattern potentially. And we also had another A to B equals C to D pattern yesterday. And that actually brings us right here a little bit higher. So anywhere up in this area would make sense. We have a point of control. We have a gap that still needs to be filled. We came very close today. However, we didn't quite make it. We missed it by a few points or so. So now as we look at the volume profile levels, notice what we did. We just wicked right below value area low, which comes in at 18,137. The point of control will come in at 18,168.00 and value area high will come in at 18,369.00. Now tonight, this is going to be a little bit more challenging. One, we have some minus development areas within this profile that I want to contend with, but also we have some upper level targets. So if you're wanting to get short, be very careful. All right, let's trade the charts that are in front of us. If we're trading below value area low tonight, then I most certainly am going to have my bear hat on. I'm going to be looking for lower prices, a retest of today's low. Anything below today's low, then I want to be open to the idea of a retest of yesterday's value area low, and then maybe even all the way down here from the candle bodies right here to the candle wicks, kind of mark off the zone, something like this as a final target. Now, I don't know that we're going to make it down there. We're really lacking major economic news to push the markets quite that low. Now, if you guys want to see if Apex is a scam and if Apex is actually paying out its traders, make sure to watch this video right here.